Bernstein points out in a note today that the spot Bitcoin ETFs are really the largest pipe ever built between traditional financial markets and crypto.
Possibly the single largest catalyst in crypto history is upon us. Gold rallied over 250% after their ETF was approved back in 2004. Of course, the excitement for Bitcoin has already started.
As you said, Bitcoin had been testing that $40,000 level the last few days, finally breached $42,000 earlier this morning.
And while the country of El Salvador is tweeting about it, as well as an investment giant's CEO disclosing her crypto holdings, all this and more, I'll share with you all. The truth of the situation is, when you compare Bitcoin ETF to the gold ETF, and by the way, the gold ETF rallied into their approval as well, like Bitcoin, the dirty truth of it all is the day, actually maybe the week, that Wall Street listed the first ever gold ETF back in November of 2004, the price never came back down again. Yes, of course, it was a bit of buy the rumor, sell the news, but once that on-ramp was put into place, the gold price never came back down again. We may never see this Bitcoin price ever again once the BlackRock ETF and others are approved. And according to Bloomberg's expert analysts, there's still a 90% chance that all spot ETFs all get approved between January 5th and January 10th of next year. And here's why the mainstream is telling you Bitcoin is pumping.
For one, the market, as you mentioned, is expecting to finally see a rate cut in the coming year after recent comments from Fed Chair Powell last week. But really the big thing on everyone's mind are the spot Bitcoin ETFs. Traders are increasingly bullish that the SEC will approve one of those applications by the first quarter of 2024, potentially as early as mid-January. This would allow investors to buy into digital currency directly through the same mechanism that they already use to buy stocks and bond ETFs. So you've got top asset managers, including BlackRock, WisdomTree, and Invesco, that have filed applications with the SEC.
Bitcoin has again entered the top 10 assets globally by market cap. They have again surpassed Tesla. They have again surpassed Berkshire Hathaway. Of course, if/when Bitcoin eventually surpasses gold, that's well over a 13x. Yet, just understand, with gold and Bitcoin, there is a difference. When the price of gold or any commodity goes up and the demand increases, they always increase supply, meaning they'll mine more gold when there's more demand for gold. They'll just mine more. But with Bitcoin, increasing supply flow is algorithmically impossible. It is set in stone in the most open, transparent way. And the cherry on top, Bitcoin supply flow gets reduced by 50% very soon, the BTC halving. So if demand just stays the same for Bitcoin, price should go up. Of course, demand won't stay the same. Demand should increase over time with the ETF. El Salvador's Bitcoin investment has just turned profitable, and the president is tweeting about it. This guy runs a small country, and this was his exact tweet. El Salvador's Bitcoin investments are in the black. After literally thousands of articles and hit pieces that ridiculed our supposed losses, all of which were calculated based on Bitcoin's market price at the time, meaning people trolled him for investing a portion of the country's treasury into Bitcoin. With the current BTC market price, if we were to sell our Bitcoin today, we would not only recover 100% of our investment, but also make a profit of over $3 million at this moment. Of course, we have no intention of selling. That has never been our objective. We are fully aware that the price will continue to fluctuate in the future. This doesn't affect our long-term strategy. He also puts out a little chart of exactly when the country of El Salvador bought. Also, breaking news, Brazil's largest private bank, Itaú Unibanco, to launch Bitcoin and crypto trading services, meaning Brazil will help their clients invest. But as the Bitcoin spot ETF excitement builds, and we look at what happened to gold, again, there was an initial sell-off, but then an explosion of buy pressure. This would be the bearish case in the long run. The bearish case for Bitcoin is that it just becomes a recommended allocation within traditional finance portfolios, likely taking it from 5 basis points or 0.5% of global assets to maybe 100 basis points, 1% of global assets. That would only be a 20x increase in market cap from here. But the bullish case is that it entirely replaces the bond market, which are worthless fiat crap. And it also replaces the monetary premium of equities, real estate, and gold, reducing those assets to their utility value as investors flock to BTC for its superior properties as a means of wealth preservation. Basically saying that, yes, people will still buy real estate for the utility because they need a place to live, but as an investment, why not just buy digital real estate? And that would make it nearly 60% of global assets. That's a 1,196x increase from today's market cap.
You know, New York was the greatest city in North America by about 1776, and you would have been late to the party. But the question is, would you buy a city block in New York in 1776? Or if you waited till 1876 and you were really late to the party and New York was the greatest city in North America, was it too late to buy a city block in New York City in 1876? Or how about 1976? If you were 200 years late to New York City, if you look at the property values of New York in 1976, what you'll find is you would be rich if you had actually bought real estate in New York in 1976.
And what about altcoins? Because with this last BTC pump, yes, there was actually a crypto market pump, but with this last pump, Bitcoin dominance rose again past 50%. Obviously, that's ever fluctuating, but these are the phases. Phase 1, Bitcoin leads, we are here. Phase 2, Ethereum leads, ETH goes up in value versus BTC. Phase 3, the large cap altcoins follow. Phase 4, the mid caps, the small caps, the memes. This is the path to alt season. But again, there are no guarantees. Never invest more than you're willing to lose. Bitcoin is up over 150% for the year. What I'm looking for is ultimately what we've been seeing. 3 steps forward, 2 steps back, seeing higher lows, higher lows, higher lows. Meaning even if we correct, the important thing to me is continuing the trend, seeing higher lows. Huge investment giant Franklin Templeton's CEO has disclosed she holds Bitcoin, Ether, and other tokens in her portfolio. The most of those other tokens would be Uniswap and SushiSwap.
Well, it's so funny because I remember, I think it was in November of 2019, there was a filing that you guys had made that was picked up by, and it was the first mention of using the Stellar blockchain. And I was like, this is exactly the way that you want open technology to work. You guys looked at this, made your decisions about what you were going to do. No one had to force you. Like no one went out and said, hey, we're going to pay you lots of money to do this. You guys figured it out. We were thrilled to see that because that's exactly what we want to see happen all over the world. And what we do see happen, not at this scale necessarily, but small individual developers in other parts of the world can grab the technology and do it. But once we did, we were like, hey, we should be talking to them. And so we started the conversations, and it's just been so nice to watch the journey.
Yeah.
And to watch that, you guys did very methodically approach this.
Yeah.
And so what are the benefits that you see for?
Well, I mean, of course, at the time we were, trying to figure out which platform to use. And, I think we ended up with Stellar because of really the capabilities that you guys have that were so important for the regulatory environment, right? I mean, so this concept of being able to, claw back a transaction, right? That's important. We're required to do that. If there's something that happens, you got to be able to fix some of those things. And have this control environment in which we're responsible for. And, the Stellar chain allowed us to do some of those things. And then also, you guys Stellar's amazing with how cheap your gas fees